You're watching Reality Check. According to analysts at the RBI, India for the first time in its history is in a technical recession. The dictionary definition of that means it's 2 consecutive quarters of slowing growth, but that it won't linger for long, unlike a full-fledged recession. Now, this is on a day when the government announced another stimulus package with the by now expected big claims of how it will boost the economy and create millions of jobs. Now, like earlier, these claims are not immediately easy to decode. It was a maze of announcements, a mix of waivers, loans, subsidies and extensions of older schemes. But we attempted a quick reality check of Aatmanirbhar 3.0. Now, the total spend of this scheme is 2.7 lakh crore rupees. The money is being spent on subsidies, loans, incentives and so on. But the biggest chunk, almost half, is just from one particular announcement, 1.46 lakh crores on production-linked incentives. But questions over the feasibility of this mega provident fund scheme remain. We'll just come to that in a second. Now, the government claims all stimulus packages so far add up to 15% of GDP. But remember, the earlier stimulus, which claimed to be 10% of GDP, all experts felt only came to about 1%. Now, this latest package falls into 3 categories of announcement. That's how we've broken it up. The first is where you know there's a clear cash out to the government, where they are actually spending cash. So that includes an additional fertilizer subsidy, more funds to the Prime Minister's Housing Yojana of 18,000 crores, capital and industrial stimulus 10,200 crores, equity infusion in debt platforms, which is, by the way, only 5% of the total value of the platform, boost to exports, grant for COVID vaccine. All that comes to about 1 lakh crore of clear cash out. That's about half or just less than half of the package. There are also announcements where there's no cash out, like relaxing norms on government tenders, 0 cash out, tax relief for home buyers and developers, 0 cash out, and an extension of the existing 3 lakh crore credit guarantee scheme. Again, there's 0 cash out. Remember, so far only 51% of that scheme has been disbursed, raising questions: are there any takers for these loans? Now, we come to those elements of the package where the cash out is unclear. So, as the government said, there's a production-linked incentive scheme for 10 quote-unquote champion sectors of the economy, where they said it will be to the tune of 1.46 lakh crore. This is, as I said, the big ticket announcement in this whole package. The scheme is supposed to be a top-up of an earlier similar incentive scheme of 51,000 crores. But the reality is that 16 companies were approved in the earlier scheme, but it's unclear how much these companies were actually paid. How much did they get from the government? The second question mark announcement is over the additional 10,000 crore rupees the government has announced to the Prime Minister's Rural Work Scheme, which is the Prime Minister's Grameen Yojana, Garib Kalyan Yojana. The reality is that the funding of this scheme as a whole is unclear. The Finance Minister in June said there's no additional outlay for the scheme. So is this 10,000 crore rupees for the scheme, or is it for Narega, for whom 40,000 crores was earlier set aside? The third announcement over which there's a lack of clarity is that the government said they'll subsidize provident fund payments of new employees, and the cash out there is 6,000 crores. There'll be lots of jobs created, according to the government. The reality is that these preconditions that they've been put in place for companies to avail of this particular subsidy are fairly complex. Moreover, employees need Aadhaar-linked provident fund accounts to be able to access the money that the government will remit into their accounts. So, the question still remains that now with the Aatmanirbhar 3.0, is this going to finally start turning the economy around, or is this again a case of much more bang but much less buck? Joining us tonight on the show, we have with us Nilesh Shah, Managing Director, Kotak Mahindra Asset Management Company Limited, is a member of the Prime Minister's Economic Advisory Council. Subhash Garg, former Finance Secretary, Secretary Economic Affairs, and Professor Arun Kumar, Senior Economist. Joining us from the Congress, Supriya Srinath. Thank you all so much for being on the show with us. Nilesh Shah, so again, as this news comes of the fact that India might be slipping into a technical recession, comes this new package. But again, Nilesh Shah, if you really look at it, the big demand from all sections has been that the government needs to spend, spend, spend. But again, if you look at the announcements, do you see that kind of spending? Or is it again mired in this kind of web of loans and subsidies and all of that, which makes it quite complicated for people to access? Is it really pushing cash into people's hands? Liquidity into the economy? Yes.
There is a saying which says that color of the cow doesn't matter as long as it gives milk. Whether government is spending money or whether government is announcing incentives which will be paid over a future point of time, or it is extending credit guarantee, which may or may not materialize, but it will help in availing of loan. All the measures needs to be taken. If we fund everything by way of actual cash spending, then fiscal deficit will go out of control. And the same people who are today telling that we are not spending much will say that you are becoming fiscally imprudent. So I think as a smart player, we have to balance all the opportunities.
I take your point. I'm just asking you for your view. Do you think that all that you're saying, leave aside, from the government's point of view, from your point of view, is this really enough? Or should they have actually been spending more and spending much more directly? Now, are you okay with this?
If you look at the month-on-month numbers, they are clearly improving. GST was up 10% in October. Exports are up by 5%. Railway freight loading was up by 15%. IIP number after 6 months has become positive. Marginally positive, but it has become positive.
These are month on month though. So this is not year on year.
These are all year on year numbers.
Right.
GST was year on year. Export was year on year. Railway freight was year on year. IIP is always year on year. The PPI numbers are at all time high. And unemployment measured by CMI data is now comparable to pre-COVID level. So there is a momentum building up in economy, and government, by taking all the options available under credit guarantee scheme, under cash payout, and under incentive scheme, is sustaining.
So you're saying, all right, you're saying that things are anyway improving, and so perhaps what the government is doing is enough. Garg Saab, do you agree with that, or is this again falling short?
See, the economy on the consumption side is back to pre-COVID level now.
Sorry to interrupt. When you say conjunction side, just one request to all of you: let's not use very highly technical jargon. Because it's a very general audience we have. So
consumption economy is fairly well understood. What we spend on our current consumptions, food, clothes, etc.
Oh, sorry, consumption. I beg your pardon. Right, I understand. Yes,
consumption, so the consumption is practically back to the pre-COVID level. It is also reflected in the inflation number, which were announced today. If you have a high inflation for vegetables and all, that means that people are buying, and there is not enough supply for that, and that's why it is. But the problem is that the capital spending, the spending for the investment is
by companies. Capital spending is what
by companies, by individuals, by firms. Private enterprises and all, SMEs, everywhere. So roughly, you see, 70% is consumption of GDP and 30% is the investment. That investment side is still not picking. You had the data today which said for the capital goods, which goes into the investment, this is the 23rd month of continuous decline. So the economy is fairly well back on to the, in aggregate terms, very close.
But when you say that, hold on, let me just jump in for a second. When you say that if at least on the consumption side, which as you said is 70% of the economy is starting to turn around, Mr. Nilesh Shah said a lot of indicators, economic indicators are better. How does one reconcile that? Again, let's try to break this down for the ordinary viewer with the fact that the RBI is saying that actually we've entered a technical recession. We've already had a terrible quarter. We're going to have another slowing quarter? How do the two
that's
measure
fairly, that is also fairly clear. In Q1, we were in big recession, 24% minus. RBI also said in the second quarter we would be still in contraction by about 8 to 9%. So therefore, the 2 quarters which have gone, you are in recession, you are in contraction. Now we are in the third quarter. By the time now you are member, on consumption side, you are back to the normal level.
Okay,
right?
so you're
What
still
the stimulus package which
stimulus. Yes, sorry. Yes, complete that point.
the stimulus package which was announced today is very high on the amounts and the words, etc. But that's not reflected so far in terms of how the expenditure which has actually taken up shows up. We have now the numbers up to September. In September, for first 6 months, government expenditure in a year when there is a stimulus taking place, the expenditure should have actually gone up. But the expenditure is 5% lower than the expenditure which was there in last year for 6 months. So the expenditure is not reflected. Government is actually moving on 2 tracks simultaneously. On one track, it is spending more on food and some wages and other kinds of things. But at the same time, it's also holding back the expenditure in many. So of the about 90 odd ministries and the departments which the government has, as many as 70 to 75% of the ministries and departments have seen lower expenditure in first 6 months than last year.
I see. This is very interesting.
So
No, one second. That's an interesting point you're making. You obviously have looked at the numbers. You're saying that first 6 months of this year.
Yes.
If you look at the expenditure, it's actually less than the first 6 months of last year.
That's correct.
I see. This is, and despite the fact that you're supposed to be in the middle of stimulus. Okay. Is that okay? Let me come back to you on that. Let me come back to you on that.
Additional expenditures. Yeah.
Let me come back to you on that. Professor Arun Kumar, is this one of the problems that we are seeing, that there's a lot of hype and big announcements in terms of the numbers, the zeros, you lose count of the zeros, but in real terms, it's actually the reverse.
So you're right, Srinivas. What has happened is that the budget was formulated with the expectation that there will be a 10% nominal increase in the GDP from 204 lakh crore to about 225 lakh crore. But instead, if you go by the RBI figure, there's a 10% contraction this year. So 204 lakh crore will drop to 180 lakh crore. So there'll be a 45 lakh crore gap in the GDP compared to what was expected. So the demand shortfall, in a sense, is about 45 lakh crore. And as was correctly pointed out, investment has dropped very sharply. So therefore, the consumption proportion has gone up. It doesn't mean the absolute consumption has gone up, because large segments of the economy are still way down, especially in the services sector, which is 55% of GDP. So you have hotel industry, restaurants, you have tourism, travel, you have various other services like education, health, etc. They're all down. So the economy is at least 30% down compared to last year. What the government is doing is quoting very selectively. This GST data, for instance, has increased in October because it's reflecting the September data. And in September, all the entities below 5 crore, they had to file because they were given a moratorium of 6-8 months to file their returns. So therefore, GST is also gross figure, and many companies and businesses are complaining that they have not got the refund. So it's a gross figure, it's not a net figure. So the government is quoting very selectively, some of the data. But it's very clear that major components of the services sector have not done well. It's also clear that textile industry is down to 70% of last year, which is a major employer. So, and automobile sector, there's a lot of confusion because initially the data came that there's a 16% increase in what the car manufacturers have produced. But then the data in the last 3 days is that the registrations are 10% down. That means retail sales are not taking place.
So coming back, fair enough. So, so coming back to the government and what it should do or is not doing, Supriya, is the point that the Congress has been making repeatedly that look, this is not good enough. You need to spend more, etc., etc. But then doesn't that cycle us back, Supriya, to the point that Nilesh Shah made at the beginning, that where is the money for this? If you're going to spend more, you will bust the bank.
Okay, so thank you very much. And I don't think there could have been a better panel discussing these economic issues. I'm privileged to be a part of this panel, even though I may disagree with some of what is being said. First things first, let us first realize there is a recession in India, one that has never been. Our economy has gone into recession for the first time. Is the government accepting that, or is the government in denial? You know the answer better than me. Now, is this all on account of Corona? The answer to that is also a no. Because the economic slowdown started much before Corona. 8 consecutive quarters of the GDP growth rate dropped, and the government presided over this. Demonetization, GST, whatever you may. The reality is we are not just talking about a falling GDP growth rate. We are talking about the GDP volume itself shrinking, and that is a very big concern, which means employment opportunities, economic activity is shrinking. Now, to the larger point that you're raising, does the government have the money or not? There is only one way to get out of this recession, and the only way that is to spend, to put money in the hands of the people, so that virtuous cycle of consumption, investment, jobs is back in motion.
But how?
You cannot wade your way. You cannot wade your way out of this slowdown by lending. There are no takers. MSME loans, the first batch that was announced, not even half of that money has been disbursed. You know why? Because in this uncertain circumstances, people don't want to take new liabilities. You don't know whether you will have a job or not.
So, Supriya, So, but that was my question. So, fine, spend more. How? Where's the money? Revenues are down. GST, collections are down.
So stop chasing headlines to begin with. The government has announced additional capital expenditure, very well knowing that the final approvals will come only by December. The government itself has put limits on sector spending in the fourth quarter, which means there will be no money spent. So why on earth are you making false headlines? Why are you saying we are allocating so much?
One is stop chasing false headlines. You're still not answering the question.
Is the only answer.
You're still not answering the question about money. Where is the money?
Direct cash transfer is the only answer to the ills of the Indian economy. If you don't do that, we will be doomed. Consumption is not going to pick up. People will not borrow loans.
Nilesh Shah, you still, by the way, didn't answer my question. Where is that money going to come from the direct cash transfers?
The government can borrow.
Nilesh Shah.
Money can come, Srini, from variety of things. One, my favorite topic, gold amnesty scheme.
Yes, gold amnesty you've spoken of.
$2 trillion of gold lying in tijoris. It needs to be brought into the open economy. Second could be strategic divestment. When you sell your company in market, you don't get good prices. When you sell it on a strategic basis, you get multiple times prices than what it is quoted in stock market. Third could be legalizing your betting and gambling kind of activity. IPL season is just over.
Nilesh Bhai, I don't want to interrupt, because I'm only saying that these are some of the steps you've proposed before also. We've not seen any movement on it. Also, some of the things you're suggesting, like divestment and so on, that is part of an ongoing, part of any government's policy. But that's all. That's all mid to long term. Isn't this an immediate crisis, as Supriya is saying? Is the government even accepting of the fact that we are now in recession, and is their response commensurate with that? Or is it too timid?
Acceptance of recession is official. RBI itself has said that for 3 quarters we are likely to be degrowing, and only in March 21 quarter we are likely to grow. Second, we have to raise resources. We can't fund everything by borrowing.
But it's RBI. It's an RBI report by analysts. I don't even know. I mean, you know how it is. It's not necessarily official RBI, but it's
RBI has officially said this. In the monetary policy committee, it is officially communicated. So I don't think so. There is any denial that we are in recession, but we must be innovative. We need to raise resources. So that
through other, I think Professor Arun Kumar,
private investment, as Mr. Garg mentioned.
I think Professor Arun Kumar wanted to come in. I think on that gold amnesty, you wanted to come in.
So, gold is actually an asset which you can sell, but, it's only a transfer of assets from one hand to the other hand. It doesn't really mean that the economy will have higher investment. And similarly, disinvestment also does not mean that the investment in the economy will go up. So these are things that may get some funds for the government, but will only mean transfer of assets and investment in other areas will go down. So I think what is required is that the government needs to borrow. Banks have a lot of liquidity, about 8 lakh crores of liquidity, which they deposit in the RBI at reverse repo rate. And then you have, I've been suggesting COVID bonds, which can be floated, which the wealthy can, subscribe to, and which also the banks can subscribe to, and the balance then the RBI will have to supply to the government. And look at the fiscal deficit. The fiscal deficit is running very high. The center's fiscal deficit alone is now something like 15% of the lower GDP. And if you add the states and so on, it will be 25%. So there's a real resource shortage in the economy, and we have to think out the box. Gold will not help in this situation.
Garg Saab, if you were still in the saddle, if you were still in the finance ministry in North Block, what do you think borrowing is an option? Can the can the government borrow at the scale that is required in this scenario?
See, the government is already borrowing extra this year. They have raised the borrowing from 7.8 lakh crores to 12 lakh crores already. The government can borrow more.
It can.
In case of,
there is space.
See, in emergencies, war and situations like this, the space is as much as you want to create. Very clearly, the government's preference is to not escalate the fiscal expenditures beyond a certain level and push the money through other means like banks and all. That is why these schemes like emergency
But the problem is
lending scheme and all.
But
I would have no.
But the problem, as Arun Kumar pointed out,
if that works,
are they any? So fine, you can try to kind of layer it. But are there any takers for these? Like for example, the loan scheme, only 51% has been disbursed.
That's precisely the point I am trying to make. The government is banking on banks to lend and deliver that.
It's not going to happen.
That is also not working, unfortunately.
Right.
The 3 lakh crore was supposed to be dispersed in 3 to 4 months. We are down the line, only 50% is done. In fact, this 50% is also not really reflected. The bank credit expansion is only at 5.1%, which is one of the lowest in last 4 or 5 years.
Right. So that's also...
none of these measures which should have led to credit expansion has actually taken place.
Supriya, you're...
effective.
Right. Supriya, you said it's not happening.
I said it's not going to happen, Vasu, because people who have lost their jobs or whose wages have been cut, they are not certain about their future. And there is a huge population, 40 to 45 crore people who are outside the organized economy, the unorganized sector. Unless and until you don't put money in the hands of people, things are not going to move. The government can keep doing one press conference after the other to grab headlines, but that is what they will end up doing. They will grab headlines but not move the needle on the Indian economy.
Okay. Well, we're heading into Diwali, so... bit grim, but let's hope that on the other side of Diwali, perhaps we might have a little more cheer. But anyway, fantastic panel. Great to have all of you on Reality Check as always. And thank you so much for watching. We're completely out of time. Thanks for watching. Good night.